Thank you so much. I really appreciate that very kind introduction. And, I hope this can be interactive. I hope you have questions. I'd love to answer your questions. So, yes, I did spend some time in India before I went to the US. I'm a Maharashtrian. And I was born in Nagpur. One of the things that makes me close to Bank of Baroda is in my early days, I spent a few years in Baroda, at Baroda High School, so there's a little bit of linkage there. We talked a little bit about my engineering background, but I must tell you, I'm here, and I've accomplished whatever I have because of the many failures I've had along the way. I decided to become an engineer because growing up as a good young Indian son, you had to be a doctor or an engineer, and it turned out I didn't like blood much, so that left me no choice but to become an engineer. I went into the engineering school, and right away I recognized I'm really no good at this. And so into that engineering program, I said, how am I going to get out of this? What do I do next? I said, well, maybe I should become an economist. So the U.S. is a wonderful place. From the engineering school, I started an economics program, and when I got in there, and we did developmental economics, and there were so many smart people, and I looked at that and I said, I feel really inadequate, and I said, I'm no good at this either. What do I do next? So I went to business school, and I studied finance, and I liked it a lot, and that was good. I got myself a PhD, and I said, you know what, I should figure out maybe this is a career. It could be a career I should teach, and I tried that for a little bit, and then I figured out I was really no good at teaching either. So, what do you do when you're not a good engineer, you're not a good economist, you're not a good professor, what do you do? And so I said, maybe I should become a banker. And that's how I got into banking. Accidental things happen in life, and all of you have had a stellar rise to where you are, but that's my own personal story of failure. So, Mr. Jayakumar and I spoke a little bit about what I could speak on. There are lots of things we can talk about. I really hope you can ask me questions and what's on your mind. But what I thought I'd do is give you a little bit of sense of what's going on around the world, and then talk a little bit about what's going on in the business of banking around the world, and maybe you can talk a little bit about India. And needless to say, the world's a lot different place than 10 years ago when I took over the helm of Citi. We're in a much better place. The world has been growing well, and I think when you look around the world, the U.S. economies are doing well, and not only the economy as a whole, but even the microeconomies, it's growing well, and as a matter of fact, the unemployment rate is at the lowest rate it's been at, and it feels really quite good. The Indian economy feels exactly the same way. I mean, it's the other economy where the growth rates are doing extremely well. It's very vibrant, and sitting outside of India, looking at India, it's one of the hidden gems in the world. An economy that is very much a domestic economy, and is adding very well to the GDP of the world. There are some issues around the world. The European businesses the European economies are still trying to figure out how to grow. They're stable. They're growing a little bit. Latin American economies are still mostly resource and agricultural economies. They rely a little bit too much on China. And so the last big economy in the world is the Chinese economy, and it continues to grow. There are challenges. There are issues about the trade war with the U.S. and where that might go. I mean, there are all these considerations that are out there. Having said that, the picture is really not all that bad. And if you really look at the small and big pieces around the world, there is a sense of stability. There is a sense of positive direction, upward growth, and that's a much, much better place to be than we were even 5 years ago or 10 years ago. It's something worth capitalizing on. The One of the things that's changed in the last 10 years is the architecture of the banking system and what's happened to banks around the world. And we went from a situation where we had confidence issue and undercapitalization issues in the US to ones where the banks are strong and the banking system seems to be pretty strong. The European banks are still on their way to recovery. They started slower. Things don't happen as fast in Europe as they happen in the US, but they are on their way as well. In the meantime, the emerging market banking system has grown. There are new champions emerging. I mean, you see it here in India, but also in the Chinese banking system, the Southeast Asian banking system, the Latin American banking system. There is a robustness to a sense that the banking systems are a lot more experienced than they were. There are issues always when you run banks. Banks are a risk business. You have profits, you have losses, you have non-performing assets, but by and large there is a good architecture of a banking system around the world. But the big shift that we're seeing happening in the banking system is a shift from a 20th century architecture to a 21st century architecture. And this might be one place to spend a little bit of time, and then we can open up to some questions. So, I'm sure most of you have heard about this phrase called the Fourth Industrial Revolution. And I'm not necessarily a big fan of the phrase, but it does encapsulate something that's quite significant that's occurring in the world. And that significance is about the digitization of the world, information driving decisions, information leading to lower frictions in the world, information linked and data leading to a very different kind of industrial architecture. And you know, what does that mean? And maybe there's a way of thinking about it that you're seeing it here in India today. But in the US, about 23 years ago, there was a small company that went public called Amazon. And you know, those were the days, early days of the internet era, early days of data, early days of digitization. And 23 years later, you have one industry in the US, the retail industry, which is fundamentally different as a result of that one company and that one approach, which was really based on digital marketing, online marketing, and a fundamentally different business model way of dealing with the consumer needs. It changed the entire industry. Some of that in the retailing you're trying to see here in the US, but that is in a way a microcosm of what it means to be in the Fourth Industrial Revolution. What's happened to retailing can happen to other industries. There's another industry where this shift is more recent. A few years back, I think less than 10 years back, we went from hailing cabs or taxis on the street corners to being able to call them online. And well, that itself was interesting. That's digitization, etc., but we found something very different. This company, Uber, had found a very different way of providing taxi cabs to individuals and their needs compared to the prior structure in the economy. And it was based on, we don't own the cabs, we don't own the drivers, we just own a platform that's going to connect the people who want to drive with the people who want to be driven. And all of a sudden, you had a very different business model, one which was based on, I own the cab, I drive the cab, hail me on the corner, to one where it was not only digitized, but it was modularized. They didn't have to own the taxi. They didn't have to own the driver. It's a fundamentally different business model that connected the need with the provider of the need. And that's led to Uber, and here you see that, or Lyft, or a variety of different providers, and that's a shift in the business model. So that's the second consequence of the Fourth Industrial Revolution, which is a shift in business models. The same product that you want, supplied in a very different way than it was before. And this is important, because if you're a taxi cab company, and you decide, I want to be in the modern age. Let me digitize. Let me have my service available on the mobile phone. Call me or text me and I'll come get you there. Well, maybe that's a modernized approach to getting a taxi, but doesn't make that online taxi cab company an Uber. And Uber is a fundamentally different business model than that online taxi cab company. So what is the fourth industrial revolution about? It's not only about data, modernization, meeting consumer needs. It's not only about the online cab company, online taxi company, but it's also about fundamentally different business model, like an Uber is to a taxi cab company. That's the era we're in. That's the fourth industrial revolution. And the question to banking and banks is that going to happen to banking? Can that happen to banks? And that's the question that's been asked about banking and banking architecture around the world. The 20th century architecture we know well. A fully vertically integrated bank. You originate, you underwrite, you take deposits, you process, you fund, you do everything. Is it likely that we're going to see a different architecture which is much more modular? If you want to make payments, you don't have to go to a bank. There's an app that allows you to do that. If you want to invest, there's a different way of doing it. If you want to borrow, it doesn't have to be a bank. Those are the questions that are being addressed around the world. And, you know, some change is likely to happen. Are we going to see what happened to banking? Or what happened to the retailing industry or the taxi cab industry happen to banking? I don't know. We'll wait and see. But that's the general direction we're going in around the world, and different parts of the world are moving at different speeds. China is very far ahead in thinking about this. Ironically, the U.S. is probably furthest behind. I happen to think that the Reserve Bank of India has done an absolutely fabulous job in thinking through some of these issues and thinking through how you can have different kinds of structures, payment banks, NBFCs, full service banks, everything together. And when I go around the world and talk to central bankers, whether they are in Singapore, who are really far ahead in their thinking, the Chinese who are not only ahead in their thinking, but in practice, we find a great deal of assurance when we deal with the people at the Reserve Bank of India, because they're thinking through what could this architecture be. And so this notion of the I-stack that you have in India, which starts with Aadhaar, which is identity, to a payment interface, to APIs that allow you to go back and forth between banks, that I-stack is a foundational element that can help design what this 21st century architecture may be like. So, through all the NPAs that always happen around the world that the system has, here, through all the questions about what is this about NBFCs, there's always something new in the newspapers, to everything else, you should find a great deal of assurance and a great deal of satisfaction in the fact that you actually are, in India, we are, in many ways, building the 21st century architecture for banking. We're building it piece by piece. Just like when we went from when the cell phones were all, you know, hardware-based Nokia phones, to today you have iOS or you have Android. You took a vertically integrated model and moved it sideways to an operating system. The I-stack is an operating system for the banking of the future. It can create enormous opportunities for all of you. We're very excited about it. I'm extremely excited about it. I've now spoken too much already. So I'm going to stop right there. And I did say I would take questions, so if you have 2 or 3 questions, or 4 or 1 or whatever, I'm happy to take them.
Yeah. Just wanted to know, not on what you spoke, you know, that is fine.
No problem.
Yeah. But just looking at your wide experience of the world, and the way world order is changing today, I'm talking from the point. And if we go 30 years back, 40 years back, US GDP was more than the next 9 countries.
Yes.
And slowly Japan changed this order.
Right. Right.
Japan changed this order.
Right.
And that was possible because US was still coming with innovations on software and all, you know, well, they could still maintain their lead. Then came an order where China was given.
Yeah.
I would use the word, it was given a chance, you know, by the world because of various politics,
Right.
Russia and all. And now the stage is that China, rather in the last 40 years, it is for the first time a great economy is challenging US. Looking at the site with which US works, one, looking at their military army power, two, looking at the fact that they are still, though Europe tried, they are still a vehicle currency. How do we see the order? Because this is the question is with respect to, you said that there is a trade war and all those things, you know, that is going to challenge. So of course the technology is doing its job, but looking at the whole thing, my question is very long, but yes, looking at how do you see the new order in the world?
Yeah. Well, I think that is the question, and that is if there is one uncertainty to all the good economic indicators that we talked about and the positive growth, is that we have gone from a known order of how the world goes to a world that's searching for what is this new order and what is this new architecture. These are all growing pains. The U.S. found itself in an unusual situation post-World War II. And I don't need to tell you why, but it's because of the wars which took away the European might and because of colonialization that had limited the might of the eastern countries. So it was a very specific and a very special time for the U.S. to find itself as sort of the uncontested country with a lot of wealth and a lot of power, and it took advantage of that, and that is changing, and it should change, and it will change. And not only should you have China there, but India as well, and if you go back not too far in history, just 100 or 200, a couple of hundred years ago, 300 years ago, between China and India, that was about half the GDP of the world, and there's no reason why that may not turn out to be the case. And the questions are less about the U.S., which has this ethos of innovation and the ethos of growth, but really one about where does Europe fit into all of this, how will it fit in, what will its share be. Those are all things that are a natural consequence. So the questions, I guess, are multifold. Here, as bankers, you talk about, well, what does that mean about reserve currencies? Shouldn't reserve currencies follow GDP? The answer is yes. In general, the answer is yes. Having said that, what 90% of the trade in foreign currencies is still dollar and the euro and the sterling and the yen. When you strip out the yen and the sterling, a very large percentage is still in dollars. So to be a global currency is more than about GDP. It takes trust. It takes openness, and the question is whether, even though the GDP rises in the Chinese economy, the Indian economy, will regenerate that trust. One of the aspects of trust is the independence of the central bank from the governments, and that may not necessarily be the case in all the countries that have high GDP in the world. So these are open questions that are untested that we're going to have to test. By the way, the macro question is that will we go to digital currencies? And will there be something else that is a reserve currency other than well, this is the evolution that we're in. The other part of the evolution is this notion of the fourth industrial revolution. Because GDP is still measured on production. The fourth industrial revolution will put a great deal of emphasis on ideas and concepts and artificial intelligence and other things, and we need to watch that. And if there is a shift in the world along this dimension of the fourth industrial revolution, that would worry me more than this issue of which country has the highest GDP and what's happening and how does that power shift. And the reason for that is because the Chinese are very well ahead in thinking through this. They're extremely well wired. And by the way, when you have a one-party system, you don't care about information privacy, so you know everything about everybody. And it sort of puts a different emphasis. It's like it's an economy on steroids. When you have information about everybody and data about everybody, can you turbocharge the economy and take it even further? And that can translate into not only GDP growth, but also an ability to monitor what's going on informationally around the world. And you hear a lot about fake news, and election meddling, and things of that sort. So it's natural to see GDP growth and GDP getting shared in the world. It's the way of things. But watching the fourth industrial revolution and where it takes us is going to be important. I don't have an answer for you. I just gave you a long perspective on I don't know. But these are all important questions. Mr. Jayakumar, what do you think? Should we take one more? If there is a question, if not, it's up to you.
Would you like to articulate on the digital currency and how that will go? You know, central banks are getting against it. They still have made it very difficult for that to happen.
Yeah. So Mr. Jayakumar asked the right question, and I expected nothing less than that. It's probably the question that